Okay, this is how I calculate return on investment on a BRRR rental. The first thing you've got to do is figure out how much you've spent, not just the cost of the property and the renovation, but anything else that you've spent on it, like legal fees, like any utility bills whilst you've been renovating it, your council tax, any planning permission or architect's fees, anything else. Second thing to figure out is how much rent does it actually make? Not what you were quoted by an estate agent, but what you've actually contracted with somebody to pay. Then what we need to figure out are the costs that you will have during the time that it's rented out. And that is not just the mortgage. You're going to have maintenance. It's going to cost you to find tenants. It's going to cost you to manage the property. And then there's also holding costs, which is buildings insurance, annual CP12 and EICR every 5 years. Refinancing the property also has costs associated with it. So there might be a mortgage arrangement fee, broker fees, and there will definitely be solicitors' fees associated. So to work through an example, if our total spend on a property was 130k and it revalued at 150, we would be looking at a 75% mortgage value of 112,500. I've estimated the refinance cost on this one at 3,450 for the arrangement fee, for your broker fee, and for your solicitor's fee. Your monthly interest-only repayments on a mortgage of that size at 5% will be £468.75 per month. If this property were to earn £1,000 a month and we had holding costs of £300 per year, remember holding costs being your buildings insurance, your annual CP12 and your every 5 years EICR, then we can calculate how much cash have we got left in the deal. So that's 130,000 plus what you've spent to refinance it, 3,450, minus whatever you've pulled out of the property. In this case, the mortgage amount of 112,500, leaving you with 20,950 left in the property. Then we calculate your annual profit. So it rents out at £1,000 a month, but we're going to take off 10% of that for maintenance and 10% of that for management, leaving us with £800 per month, minus your mortgage at £468.75. Then we multiply that out by 12 because you're going to get that every month. And then we're going to take off the holding costs of 300. That's going to leave us with an annual profit of £3,675. Interestingly, nearly all of my rental properties profit between 3,500 and 4,000 a year. That's almost like a sensible benchmark for a property like this. So your return on investment is your annual profit of 3,675 divided by how much you've actually spent on the property, which is £20,950, which gives you an ROI of 17.5%. That is very, very good return on investment, regardless of what people say about, oh, you've got to try and get all your money out. No, if you were to put £20,950 into an ISA, there is absolutely no way in hell you would make 17.5% every year on that. The other way of looking at it is that you've got 20,000 invested and you're getting 3,600 back every year. So it's going to take you about 5 years to get all of your money out of this property. And then at that point, you've got an asset with nothing invested in it, which is still making £3,600 per year. And it'll be gaining capital appreciation as well. So I would feel extremely happy with that ROI if this was my property.